Hey, what's going on, guys? This is Terrence Ray, and I'm back at you with another weekend stock market update. Uh, right now, we got the futures market open, and currently, we got a little movement on the watch list. If you look over to the left over here, if you can't see it, we got the S&P 500 futures are up about 65 handles, which is about 1%. The Nasdaq futures are up about a little over 1.25%, and both the Dow futures and the Russell futures are both up a whole percent. So we got a little bit of movement in the market. So just in case you don't know, I always keep those up at the top of the screen because I want to know what the futures market is doing. Sometimes it can give you a hint on how the overall market will open up on Monday morning. Well, this week it'll be a Tuesday morning. So right now you can see this is a 1 minute chart. It's showing us the movement in the on the evening. Actually, this is a holiday, so this is Monday, Memorial Day, with the stock market opening tomorrow, but the futures market would be today, as if it was a Sunday. And so you can see here we are. We got some movement now. I don't think we'll hold this. It may stay like this until Monday. My overall synopsis, I think, to be honest with you, is that we will. Let's see if I can pull up the SPX and I'll show you what I'm talking about. So I actually think we're gonna probably get some sideways action this week, even though we got a lot of news. So right now, the expected move for the week in the SPX ending on Friday, May 30th is $121.74. I got that plotted out right here. And so when the market opens up, if it holds where we are right now, that'll probably put a candlestick somewhere right around here in this range. What you got, you had a little down move here. And if we get a candlestick pull back into here, um, it could go higher, right? We got a lot of news this week. Currently, I put a short position on last week, and I'm holding. I'll show you guys the short position in a minute. I got it in the Nasdaq. I sold the call spread, and just betting on either the market going sideways or continuing to go down. Now, one thing I will say, we have gold was down a little further than it is right now. It is pulled back. You can see we got a wick right here, right? I will be looking at gold going into next week. Now, just because we got the what is it, the one big beautiful bill that the House uh, passed it by one vote. I think it passed like 215 to 214 or something like that. So it's going to move to the Senate. Now, a lot of people are dogging the bill, saying it's going to add more money to the add trillions to the deficit. It's going to cut. It's going to have some cuts to Medicaid. Now, I do think that it's going to extend some tax cuts. Some people are upset about that. But from what I understand, I was listening to the All In podcast, and I heard David Sachs say that the tax cuts is basically across the board. Says something about for the middle class as well. I'd had to dig into it. I was messing around with Chat GPT, giving me some of the talking points on it, and so I didn't get that far. I just went to. I do know that it may be some cuts in Medicaid. From what I understand, it's going to have some work requirements. So you're not just going to be able to just say you. It's going to be a little bit harder to prove your to get your benefits. You're gonna have to be actively looking for a job if you're not completely disabled or something like that. So it's gonna have something that's supposed to save like $880 million over $880 billion over like 10 years or something like that. But I'm not here to judge the bill, right? My thing is, how will the market react? Now, you're looking at gold. This is the gold futures right now. So we had this was Friday the 23rd, this big green candlestick, right? I think this big green candlestick, which took out these 2 days, is evidence that we're going to push higher. I actually think we're going to go higher. Now, when I pull up GLD, which is the ETF of the gold futures, you can see how it's tracking them. And you can see I got I got kind of like I don't know what you want to call this, like a microphone or something like that. But basically, here's your pole, and then here are the trend lines. Now you had a double bottom right here at the bottom. I think we're gonna continue to break out of here and go higher. I would love to see this pull back a little bit. I'll be trying to put some type of bullish trade on in here tomorrow. Now, I may not do it in this account. I may look to get long shares in GLD. So everything I've been listening to, I've been listening to some different podcasts, getting some different views on it. Guys, gold going higher. I'm gonna pull up Bitcoin. I want you to look at Bitcoin. Bitcoin is on a massive tear. So Bitcoin going higher. We got Bitcoin going higher. Remember my next take profit on Bitcoin would be somewhere up in here right around 117. This is my next Fibonacci resistance level. If Bitcoin's going higher, gold's going higher, and I guarantee you, I haven't even looked at the dollar. Now, if I was to pull up the dollar on here, we look at the dollar index. The dollar index going lower. This is a sign of it's almost like the market is telling you this bill is inflationary, right? We got a weaker dollar, gold's going higher, Bitcoin's going higher. So that's the play for me. I'm gonna be looking to get long gold next week in some type of fashion, right? So we could look at either I've shown you gold futures, we got GLD, you can do GDX, GDX, I think it's GDXJ. You can look at it. I'm gonna also show you something else that I just pulled. See, this is the gold miners ETF, junior gold miners ETF. You can see it. This candlestick is you already got your hammer candlestick right here breaking higher. So any one of those I like for the week. That's my play for the week, right? Now I found something else. I'm gonna pull up my YouTube weekly watch list. I just ran across this stock. This is Uranium Energy Corp. Look at this nice V bottom down here. I mean, that's the definition. Look at that. Let's see if we can do a trend line. Got something like this, like so. Boom. We get another trend line. Got something like so. Let's move this out here. See that? See that V? Then you pull back here and then boom, got a gap up. Nice gap and go. If it can, the next resistance level is going to be up here, probably about $6.80. This could just continue to go, guys. All the way up here to fill this gap at $8. So whatever this stock is, I don't know what news it is that gave it this big green candlestick, but I'll be watching it as well. But anytime, so that's uranium, energy, some type of metal or whatnot. Anything, I'm almost. Let's look at some futures, and let's take a look at something. I just want to test my theory against everything against the dollar. Let's look at something like what's this? Copper futures. Look at copper futures. I had no intentions on pulling this up for the video. Look at this big green candlestick on Friday. So that's a metal. We could see that go high. Let's find let's see if we can find something like wheat. Where's wheat? What are wheat futures? I don't generally trade them. What is this? I think this is soybean futures. Let's see what this chart look like. Look at it. If I had to say up and to the right, up and to the right, that would be this. Here's wheat. Let's look at wheat. Now look at wheat. It had been going down, but you can see over the last week or so, looking like it's pulling up out of this area right here. So all of these that I'm looking at, I'm just measuring them against the dollar. Right, as the dollar is weakening, it's gonna take more money to buy certain goods. Right, you just look at it in like common sense terms. You don't have to get too technical about it. So I'm just looking at plays to go against as long as this dollar is continuing. And also, I think that the bond market, I think the bond, I think the bond, here's the 10-year note. I think at some point, um, I was thinking about putting a trade on in here, but you can see it sold off. So it's not like in the bill as well. You know, the market will tell you pretty much if it likes whatever policies are being governed at the time. So, being put out there. So I think that the 10-year and I think the 30-year, I think that it looks even worse. Here you go. Here's the 30-year treasury bond, right? But we did get a nice bullish little setup here. So maybe it's down and it hit a low and maybe we'll get a little pop higher, right? Maybe not. So I'll be looking at the 10 I probably would trade the 10-year and not the ZB. This is a little bit more expensive. So I'd probably come in here in the ZN and do something, maybe sell a put spread or something like that. We got a 31 IV rank. So I like the 10-year note. I like trying to trade gold via GLD. More than likely I'll get long GLD just by buying shares. Right. I want to see it break. We could get it break. It could break out of here, this trend line, and just go. We can get a nice move out of this. So I like this going higher. I had another stock. What was the other stock that we had up here? UEC, this uranium stock. I'll be watching it to see how it go. Like I don't want to chase it. I could see this tomorrow being up here. I don't feel comfortable just chasing it. Now we look at what are some of the other Magnificent Seven stocks look like if we think that the S&P futures and the Nasdaq futures will continue to go lower. Remember, I told you I had a short trade on in the Qs. Here we'll talk about the call spread that I have on. Here we go right here. I'm short the 24 delta right here at 530 and then long the 535. This is a defined risk short call spread. And I think I'm currently up on the position, but we'll see how if this holds, then I'll lose the little whatever I'm up. But I'm way away from the at the money right here, and we got 25 days. I'll look to do something with this. Either I close the trade on Friday if it got where I needed to be, or I'll look to roll it. Now, one of the things I wanted to talk about this week, I want to go over some option fundamentals. I had a couple friends ask me about like how do you choose the right option, and we're just gonna talk about for the most part, we're going to talk about buying options. Even though buying options, let me just put this out here, is a low probability trade from the get-go because you're buying a depreciating asset, right? Basically, you're buying one from the time you buy that option, you're basically paying for time. So time is against you as opposed to selling the option. One of the ways that I buy an option, I try to find like a target. Let's use Meta since I do have some targets already on here for Meta. And you can see right here, I got some Fibonacci levels set up. And you can see it hit right here, the 1618. Now, I got another level up here right around we'll just say 730. Maybe kind of hard to see. I'm gonna darken it up. So you guys can see that. So right up here around 735, 737, we'll call it 730 to make it easy. What I would do is that's the option I would buy. So I would try to find that right now, Meta, when it closed on Friday, it closed at 627. If I think it's gonna go to 730, that's almost $103 away. First of all, if you're looking at, I would not buy that call option with 25 days. The expected move is only $43. The expected move for 53 days is only 61. 81 days is only 88. I will probably come out 116 days where the expected move is $102. And then buy that call, buy like a leap option. See, right here at the end of the expected move, if we look at now on the TastyTrade platform, I can't say this about all platforms. You have what is called a probability of touch. It's saying that I got a 44% chance of touching this strike within the next 116 days. So even though I think that it's going to go up to that next level over time, I will probably come a little closer and maybe do the 715 strike. And you say, well, why? Because I got a 50% probability of touch. I'm using the math on the platform to get me into the right trade, or at least help me if I'm buying options. If you're doing something, let's say you day trading and you're on like a minute, you're trading. Let's just go to like I don't know, a 30-minute. And you say, all right. And you saying I want to trade. I think it's going to the downside. It's gonna get down here and hit this level down here at 610. And I think it's gonna hit it this week. So 610 from 627, it's about $17. Now, that's something that I can come up here. The expected move for this week is $19 in Meta. That will put you down there around this level. That's confluence. So if I was going to buy put, I would pick something within this expected move. This is why I use TastyTrade. It's the only platform that I've seen that has this on the option chain. Now, other you can calculate the expected move, but I want to be inside of the expected move when buying my options, right? I don't want to be outside of normal standard deviation, so I'm inside of this range. Since I got a level right here around 610, then I might buy this one right here at 610, right? Or being as that it's only a 42% probability of touch, I like to be at 50% or higher. So even though my analysis says this, the numbers say that, and I will be right here at 57% probability of touch. And that's what I would be. If I was going to buy a put in Meta, I would buy that. I generally try to find a support or resistance area within the expected move for the expiration that I'm using. If my analysis don't line up with this, then I just won't make the trade. And that's how I pick which option to buy. Selling is a little bit different. I can, get into that a little bit on a later date. But ideally, when looking at your option chain, I always, whether I'm using this or I'm using any other platform, I'm going to always have Delta up there. So if your platform doesn't have probability of touch, you can take the Delta and multiply it by 2 and pretty much get close to what your probability of touch would be. Like if you come down here and you take, so 2 times what? 43 is what? 86. You got 79% on Meta. 2 times it. Now you want to be in liquid options. Now, obviously, Meta is liquid. We got thousands of contracts over here. So the math, pretty much you want to, if you don't have probability of touch, just take the delta, multiply it by 2, and it'll get you right around the right range for probability of touch. and that's how I pick which options I'm going to buy. And it's for the same, now as far as selling, it's a little bit different. I'll use deltas I'll pick the delta as far as what I'm going to sell. I still will use delta, but it doesn't have as much to do with support and resistance or uh, anything with the charts for the most part. Like if I'm bearish and I'm looking to sell a call, then I'm generally coming somewhere around the 24 delta, 25 delta. If I'm selling a naked call, right? If I'm selling a call spread, I may look to collect a third of the width of the strikes. So it would be something like on the triple Qs right here. If it's a $5 wide call spread, then I want to collect right now it says 126. That's because it's up money. So some value has already bleeded out of these options. If I was to come over here and look, you can see I collected 164 over here. That's about a third of the width of the strikes. So if it's $5 wide, so basically if it's a $6 wide spread, you want to try to collect about $2. If it's a $10 wide, you want to try to collect around 350, something like that. Anywhere between 3 and 350 and in between that range. You want to try to collect a third of the width of the strikes. And that's what I do for spreads. So if you guys if you want me to go a little bit more deeper into that, comment the video, let me know what you think, and then I can kind of I'll go a little bit, further with it. Now with the TastyTrade platform, when you click on the trade, it's going to give you the probability of profit. So let's say I sold this naked. I sold this 24 delta, right? Well, let's go to the SPY. I just don't want to be where I already got a trade on. We're going to go 25 day. We'll go to the June. Now I'm going to sell the 24 delta. Now, if you look down at the bottom of the screen, you will see that it says probability of profit 73%. Got a 73% pop, which is probability of profit. I'm collecting $346 by selling this call. That's how much premium is going to take in. And I have my probability of keeping 50% of this. So basically, if I just want to buy it back for half. So basically, I'm selling it for, let's just say 350, penny it up for 350, right? Collect 350, and then I'm gonna keep 175. So basically, make $175 off this trade. I have a 93% chance of doing that if I sell this strike. The system is telling me that. That's a high probability trade. Now, if I want to buy this call because I thought it would be going there, I will click this right here and buy it, right? Now the market is telling me by buying this call, let's see, I got a 27% probability of profit. See how when I say it's a low probability trade, the 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 actual platform is telling you like, hey, now if you want to make 50% of what you spent, which is like you want to make 50% of this, it's telling you got a 42% chance of doing that by buying this call. So which would you rather do? Not knowing anything about technical analysis. You would rather sell this, right? You want to be the end, you want to buy insurance or you want to sell insurance. And so this is how I pick which option I'm going to buy or sell when trading options. That make any sense. But hey guys, hopefully you got something out of this video. Do me a favor, hit the like button, share the video, subscribe, and let me know what you think. And if want me to go more in depth, I can go as deep as you want me to go. With that being said, guys, I'm out. Peace.